All right. Good morning, everybody who's tuning in. Thank you for tuning in. If I was on YouTube, I would tell you to like, comment, and subscribe. Awesome. Get that out of the way. So, title speaks for itself, you guys. Identifying descending wedges and identifying flags. How do I do it? I would have showed you guys my FinViz account, and that's my screener account. It basically shows me all the stocks, and I can identify, see which one I want to get into and all that stuff. But unfortunately, my Restream, which is the platform that I'm using to stream all this stuff, it's being a little bit buggy. So I can only really show you guys one screen. So I'm going to choose to show you guys my Thinkorswim account. I'll make sure everything's good. Awesome. So let's begin. So here we are. Right now we're looking at Apple, but I'll get to that in a little bit. I've only really want to talk about two stocks, and the two would be ALSN and Apple. ALSN I just hopped into not long ago. We're pulling back a little bit. As we can see, this is a daily chart. This is a wedge. I know you guys don't normally, you guys will see my pattern already drawn out, but I wanted to talk to you guys about how I identify the pattern. So I start by looking at my FinViz, and that's my screener. I can choose to see technical charts or candlestick charts on the FinViz. I use the technical. It has most of these lines already drawn out for us. And what I saw on FinViz was this here. This is the pattern that I saw right here on FinViz. And I saw it and I was like, okay, that looks a little wedgy. So from there, I'll hop onto my my Thinkorswim platform, which is this one right here. And basically I'll draw it out myself. And what I saw was something a little bit more like this. This looked a little bit more of a wedge to me. And the reason why is because we have a little bit more touches of the price. It touches the pattern a little bit more when we draw it like that, rather than drawing it like this. Right here, we only have what? One touch here, two touch here, three touch here, and four touch here, right? I would want to see as many touches as possible. So if I put it here, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, yada, yada, yada. We have far more touches on here, and we just recently had the break. We can see the nice break of the EMA. EMA is starting to curl up a little bit. That's very, very, makes me a little bit more confident in stock, and that's the reason why I bought in. Now, with these patterns, I can tell you that anything is a descending wedge. I can tell you anything looks like a descending wedge, right? It isn't until the stock pattern validates the stock price validates the pattern until it's proven to be an actual descending wedge. So in this case, if this stock were to fall off, it wouldn't be a descending wedge, would it? It would just be a price movement. That's all. And maybe my patterns aren't valid. In the stock market, we can never be too sure about where the price is going. And, we can't be too sure about these patterns either. Patterns tend to repeat themselves, but they do not have to. And that's very key to all this right here. So that is one way I use to identify. Really, it's just drawing these patterns out and seeing how many touches we can get. The more touches, the better, right? Like for any support and resistance, if this was a support and resistance right here, right? And then all of a sudden we have this, right? And then we come here, right? And then that again. And then that. We can definitely consider something like that we have right here. Oh, what happened? We consider this. Sure, we can consider this. And I'll kind of color code it for you guys so you can get an idea of what I'm talking about here. We'll make the support and resistance purple. All right. So we'll make this purple. And then the red would be the price action. So we can consider this right here, the purple or support and resistance, sure. But where would you see more touches? Would you see it? Would you see this as a resistance? Or maybe would you see this right here as more of a solid resistance, right? If we got a touch right there. Let me see here. Edit. Purple. That could also be a resistance as well. Which one would you be more confident in, though? The one that has more touches or the one that only happened to touch twice, right? I would be more confident. Me personally, I would trust the one that has more touches and consider the one that has two touches right here, the top one. I would consider that. Sure, it could be a resistance, but I would want to see a more solid break on this bottom run right here. So if we got another break and a touch, and then we happen to bounce off of that right there, right? See what I'm doing, you guys? That then would be a new support and resistance to me. You know what I mean? So again, this is me saying that you can't be too confident in the lines that you draw, but you use that as a indicator along with your EMA. If you guys use all these other, again, MACD or whatever it is, volume, those are just indicators to help you decide to when would be the best time, when would this stock be the best opportunity for you. In this case, I found it to be an opportunity. I bought in today to ALSN. I bought in today hoping that it's going to go up. I set my alerts if it does go otherwise. If it happens to turn around and come back down, I have my alerts set and I have my stop loss set ready to get out. Sure, it's going to be a bummer if I happen to take a loss on this, but I have to go according to my plan because, again, patterns, they tend to repeat themselves, but they do not have to. So this descending wedge, if it is one, can absolutely skyrocket and go to the top where I wanted to for a 30% gain, right? But it doesn't have to. If it happens to fall off and it happens to sell off, if it happens to sell off, that's totally fine with me. I'll be prepared to get out and I'll just have to wait for another entry or find another stock to get into. That's all it is, you guys. It's the most difficult part of the stock market, in my opinion, is letting your emotions get into it. And that's exactly why we find these patterns. We trade the breakout. And if it goes otherwise, that's totally fine. Just get ready to get out and get into a new stock. That would be a descending wedge for me. All right. Wow, that's going to be a lot for me to clear out. We'll move on to Apple now, AAPL. So this is a great stock to invest in because we all know it is part of the it's definitely part of the top 500 stocks, if not the top 10 stocks, right? We have Tesla, Apple, Netflix, Amazon is a big one. All those stocks right there. If we go on the weekly, you'll see that they've been uptrending ever since, this is the past 3 years. So from the past 3 years, we've been uptrending a heck of a lot, you guys, from $26 all the way to where we are right now, $150. This one right here, I happen to find a descending wedge that I could also consider a flag. What would you consider a flag? Well, just like what flag poles look like, right? You have the pole and then you have a nice little flag, right? That, to me, is a flag right here because if we take a look on the weekly chart, we have this nice little uptrend here. And then right here, I drew it, and you can see it better on the daily too with more touches right here, right? There's the flag, the upsending pole right there. Remove that so it looks a little bit cleaner. Got the upsending pole, and then now we're descending. Flags are very similar to wedges. They're descending wedges essentially, but they have that nice uptrend too. And that's what we got here. If we take a look on the break, sorry, not the break. We have the uptrend, and then we have the descending wedge, kind of flaggy, right? And if you'll notice, one thing that threw me off about this is the EMA was above the stock, which tells me that the stock is downtrending. But we had the break of the EMA simultaneously to the break of the pattern as well. And if we go on the weekly, it looks so much more cleaner. Because take a look. Weekly, I would use the weekly chart if I really wanted to invest in something. Just like the S&P 500, I try to focus more on the weekly chart when it comes to investing, right? Because it's going to be longer term. I don't care about what's happening during every 5 minutes or every hour. I care about the long term because I want to hold on to this long term. It only makes sense, right? If I wanted to day trade this, I'll focus more on the intraday charts. I'll focus more on the minute patterns, the 5-minute patterns, the hourly patterns. But in this case with Apple, I'm swing trading it. I'm either going to be swing trading it. That's what I do mainly. Or I can consider this an investment. I can do either or. But personally, I want to use this as a swing trade. But I can use the weekly pattern here to help me identify whether this is going to be a good swing trade as well. Because we take a look here at what I drew on the daily, the pole along with the flag. Where did the flag bounce off of? That is a great indicator for me to get into the stock on the daily. The EMA, right? The EMA obviously looks a lot different on the weekly because this is based off the weekly chart, right? The EMA, we could see it came down when the flag, it had that descending pattern, came down the flag, and then it bounced right off the EMA, which is another indicator. I'm not going to use the flag as one indicator. I'm using all the indicators I possibly like to use. In this case, my price patterns and my EMA. Those are my two main indicators. I like to keep things as clean as possible. Support and resistance and EMA, it's really all I feel like I need, and that's what's been working for me. You guys can feel free to use what works for you. That's up to you. But in this case, we have this descending flag right here, bounce off the EMA, which gave me a good sign that I could probably get into it on the daily chart as well. And this is what happened. We broke above the EMA as we broke above my trend line, and boom, we've been going up ever since. So that to me is a flag right there. Again, even though this title says how to identify these particular patterns, I'm showing you what I do to identify these patterns. And again, they do not always work. If I remember one that failed, I would show to you guys. But these patterns do not always work. again, I can't stress this enough. Patterns tend to repeat themselves. They do not have to. We draw these trend lines and we have these indicators to help us be a little bit more confident when it comes to getting into the stock. If you decide to buy the breakout and it doesn't go your way, get over it, get out, and move on, or be prepared to get in again when the stock tells you it's time to get back in. All right, you guys. So with that being said, I hope that makes it a little bit more easy for you guys to understand that just because you can see a perfect pattern doesn't mean it's a perfect pattern. There's no such thing as perfection in the stock market. Things can go south in any given time of day. You just have to be prepared and come up with a plan to be prepared to get in and out of that particular stock. All right, you guys. I hope that made a little bit of sense. I honestly go on so many tangents when I express the stock market because I have a lot of passion about this, and it's so easy to go on tangents because there's never really a solution. That's the thing. So I hope you guys enjoyed this video. If you guys have any questions, please comment. I'm more than happy to take time out of my day to help you guys have a better understanding in this, okay? So with that being said, have a great weekend, you guys. I hope you guys made money, and I apologize for not really for not having a consistent day with my posts or having my recaps and stuff like that. And I apologize because it's been a little bit busy these past 2 weeks. So you guys enjoy your weekend. I hope to see you guys very soon. All right. Bye-bye.